Good afternoon, everyone. Thanks for sticking around late in the afternoon. I'm John Scahill, CEO of Quest Patent Research Corporation. We're an intellectual property asset manager. In short, that means we acquire patents and we enforce them by bringing patent infringement litigations. Safe harbor, you're all familiar with this. Obviously, forward-looking statements, things could change. Don't hold me anything I say today. Quick snapshot. We incorporated in Delaware in 1987, pivoted into IP management in 2007, went from one legacy asset at that time to over 200 across 18 portfolios. We currently have 9 active licensing programs, 18 pending litigations, and earlier in February 21, we closed on a $27 million capital facility for further acquisition. Trading on the QB, 133 million outstanding, 163 million public float, market cap as of yesterday 5.2, share price just a hair under a penny. And we had a big day yesterday for some reason, and the average value shot up 241. It's tough to really understand what we do without laying a little bit of a background with respect to litigation, finance, claims-based. So there's like 47 active litigation funders in the U.S. It's a pretty exciting space. It's seen a lot of capital deployment. Currently just over $12 billion under management. And pretty impressive statistics for 21 in a recent survey by Westfleet, 2.8 billion in new deals. That's 10% over 2020, 32% over 19, and just under 30% of new capital commitments went into patent litigation. So that's kind of how we connect to the space. Now, claims-based overall, very exciting space, esoteric, potential for outsized returns. But if you want to participate as a retail investor, very few opportunities, right? You've got a couple publicly traded funds. Burford's listed in the U.S., Omni Bridgeway, Australia. But you also need to, if you want to participate in funds directly, right, minimum investment, you've got quite a lockup there. The revenue cycle on these things is pretty long. So as a retail investor, there's only a couple ways to really play, and we think Quest is one of them. So I'm not here to raise money. I'm here to raise awareness because I think if you're an effective portfolio manager, this is a space you want to be in, and I think we provide an opportunity to participate. So what's the business model? It really is much like any other portfolio. We're trying to build a diversified portfolio of high-value IP, and that sort of smooths out some of the risks that you see with respect to, bad beats at the patent office, bad beats in trial. We call it the patent gauntlet. We'll get back into it a little bit. There's 27 different ways to lose a patent infringement trial. And as the plaintiff, you have to survive them all, and as a defendant, you just have to win one of them. So it's a little bit of a video game where you win at one level, you just get to go on to the next. But if you die at that level, it's over. So how do we do that, right? You really make your money on the buy with a deep analytical driven diligence process. We bring in experts, third-party attorneys. Our funding partners hire independent counsel. So these things really go through the ringer before we acquire them. Once you buy them, you put them in litigation. It really kind of runs on itself with the law firms. So it's pretty scalable. Again, the real heavy lift is on the front end, identifying them. As I said, we built it to over 200 assets. We've deployed about $2 million of the facility we closed. And sort of the last leg of the stool is constantly evolving to the shifting legal landscape. There's a patent trial and appeal board where post-grant reviews can happen, so a patent's been issued, and then you sue someone, and then they take it back to the PTAB to see if it should have been issued in the first place. It's kind of an interesting second bite at the apple for the people who might be infringing. And then I'm pretty excited about it. We're not going to spend a ton of time on it today. We launched an initiative called Digital IP Advisors, and it's our natural extension into what we think is a pretty interesting space for crypto, blockchain, and NFT. That's kind of Wild West. We're going to be interested to see and want to participate as sort of the analog intellectual property world tries to map itself onto this digital space. So, NFT, what do you own? What can you do with it? What can other people do with it? Can you modify it? We think there's plenty of opportunity for owners and creators to want to have access to the suite of value-add services we provide. So, as I said, recent developments. We closed our $27 million capital facility. In conjunction with that, we were able to extinguish some legacy secured convertible notes, swap that out for an interest in proceeds, a small interest in proceeds. Going forward, we added some bench strength with three advisors, an IP expert, a capital markets expert, and sort of a corporate management expert to help us prepare for, if you look at the options that were issued to those advisors, what we're on track for here is pursuing an uplist. So started to put the team together to help us do that. And then just recently, we restructured some legacy patent purchase agreements that had some minimum requirements with respect to net proceeds, and those have been eliminated. So in short, what it's done is we have no interest-bearing debt, and all of our debt is event-triggered obligations. So if there's no net proceeds, we don't owe anybody anything. If we generate net proceeds, then we pay back our funder. Our legacy note holder has a small interest in that. And obviously, if we partnered with the seller on the back end, they get a piece of that as well. But in terms of maturity dates barreling down on us, balloon payments, none of that. We are in the rinse, lather, repeat, buy assets, put them in play, collect proceeds, split them up, and we're not hindered by no maturities influencing our decision matrix on settlement. Management, myself, BSc Chemical Engineering, MBA in Finance, JD. I am a patent attorney. We have an outside CFO solutions provider, and our board of directors, marketing professor for St. John's. My cousin Tim, who is a serial entrepreneur and a great source of advice. Wealth management advisor Ryan Lowe was added as in 2021 as part of the restructure, and I sit on the board as well. The advisors, as I said, Jeff Toller, IP expert, 25 years. He worked at Motorola. He has represented Fortune 500 companies. He was the prosecuting patent on one of the Intel patents that they were just hit with a $2 billion judgment. Oh, we've got Bill Gates, not the one that runs Microsoft, but another guy, solid, 35 years, financial markets, Capital One, UBS, Lehman Brothers, etc. And Crystal Nicholson brings the management consulting experience from Lehman, Deloitte, Cornell grad. I'm impressed with our bench strength, and I'm glad that they saw the value. Again, if you look at how they're incentivized, us, my sub-management, as well as the consultants, we're right there next to shareholders, pursuing an uplist, and that's when things pay off for all of us. So, just a brief overview. Patents are a 20-year limited right to exclude. So there is no obligation that you actually practice a patent. That seems to be a narrative that the infringer lobby likes to put together, that we don't make anything and therefore we're just a burden on them. But that's not how the patent system works. It was set up like that on purpose to harness the innovative potential of the whole nation. And you are not required to launch a business out of your garage and try to compete with Microsoft. You can simply invent something, and when they steal it, you can hire me and we go get money for it. There are over 350,000 patents issued every year. Again, infringement is the unauthorized manufacture, use, or sale by someone else without any requirement that you practice it. Enforcement is costly. It's usually out of the purview of the typical patent owner because it's high risk, a lot of money, and it takes a lot of time. And that's where we step in and provide exit ramps for defunct corporations, universities, individual inventors. We can help them with some upfront liquidity. We can take on the burden of the cost of litigation and the cost of a portfolio. We can deliver some liquidity. Now, the interesting thing is because they're so risky, because there's so much cost, that 90% of patent infringement settles before the Markman, which is your claim construction. It establishes the means and bounds of your patent. And less than 3 ever go to trial. Less than 3% ever go to trial. So there's incentives on both sides to try and find a way out of these things before they go in front of mechanics, librarians, and engineers to figure out what these patents mean. Probably the headline that we need to hit is that these returns are largely uncorrelated to the broader market. So we don't really see upticks and downticks in terms of patent infringement or patent grants based on how the overall economy is doing or how the S&P is doing. The intellectual property space kind of just churns on and on year after year. Right around 350,000 patents issued, right around 4,000 patent infringement cases, and the settlement rates are pretty consistent over time. Now, As I talked about before, the success drivers for us is obviously diversification, because you're not going to win all of these. You have 27 opportunities to lose every single one of them, and you need to win. So you want to have a multi-asset portfolio. We like to find things with broad addressable markets, multiple rounds of litigation. We want to stack these things, serially, where round 1, round 2, round 3, across, a whole diversified portfolio of assets. Challenges. Again, you make your money on the buy, sourcing and selection. We think we've proven out our ability to find patents, building up a portfolio of over 18 families. Our process is analytical. We are quick to know because, we hire best-in-class litigators to help us diligence these things, and we look at all 27 points where you might lose. Execution, you got to construct these things properly. You have to have a commercial mindset. You have to know your risks, and we think we do that pretty well. And then in terms of liquidity for our shareholders, by having a lot of these lines in the water, a lot of irons in the fire, you can smooth out those lumpy returns, and we think develop a pretty steady revenue stream. Just to walk you through a couple examples of our portfolio, we've got the PEREGRIN licensing portfolio. This was 8 patents we acquired. This was our first acquisition out of the facility. Generally relates to inbound and outbound call processing. How that kind of played out was, if you look at your credit card statement, there's an 800 number. It's called Schumer box, and by law, the banks are required to route you. And we found that those read on our patents. We initiated litigation in July 2021, and I think we resolved that in November. That was an individual inventor. In fact, while the technology was developed by an operating company, the patent prosecutor ended up taking over the patents as part of a satisfaction of unpaid fees. So we were able to provide some liquidity to that patent prosecutor and get him back sort of his invested time and have a back-end share. So that's one example. Multimodal media. Now, these are the patents of a company called Carusa, and this is our second acquisition out of the fund. Again, a partnership with the inventor. We have 2 cases pending, and this has to do with recording and sending interactive messages. So think of it as sort of like sending a voice note on your smartphone, where you record it and send it. So far, we've sued ZTE and the maker of the OnePlus phone. This is just as we kind of talked about setting these things up. This is the first round. We've sued some Japanese companies that we can stick in the Eastern District, or some Chinese companies that we can stick in the Eastern District, and then we'll look to add more rounds of cases against additional smartphone manufacturers. Tessera licensing. Another interesting example of sort of one of our investments. I think 7 of the 29 patents were originally acquired from Tessera Inc., a defunct network security company, and then the other 21 plus the foreigners came from a company called Daedalus Blue that bought a bunch of patents from IBM, and they assigned those to us in exchange for a piece of the back end. So this is kind of an interesting collection where some of the patents came from an outright purchase that we used our facility for, and the other came with a fellow participant in the IP monetization space who thought they fit well with ours and was interested in having us take up the mantle and run with it. So we have 2 cases on file right now, Trend Micro and Checkpoint, and I know that there are additional complaints ready to go. SoundStreet, interesting example of an individual inventor. These were in a Texas LLC. We acquired the LLC. The technology relates to simultaneously recording data streams at 2 different qualities. One that you can transmit easily, so think about like your video conferencing and what you're seeing right then. And then the other one is a secondary one that undergoes more processing. It has applications in video conferencing, but also in the recording industry. We're in our second round on this one. The first one was in September of 21 with Panasonic, Nikon, Olympus, Sony, and Yamaha. Those were all resolved earlier this year. And now we're in our second round. We've gone after 5 Chinese drone manufacturers. So that's an example of kind of how these things, the life cycle of these assets, you launch a program, you reach resolution, or you get close to resolution, you get the second one going. and then you just try and build on top of that. So highlights, patents is an asset class mispriced and inefficient, and that has a lot to do with the esoteric nature of the underlying knowledge you need to be able to identify these things and engage them and monetize them. Not correlated. I think we have demonstrated the ability to identify them, acquire them, monetize them. Certainly the developments in 2021 with respect to the facility and reducing and eliminating the outstanding debt and any interest-bearing debt, I think is going to have us looking better than we have in the past in terms of our cost structure. Been doing it over 15 years. When I took over in 2007, the company was dark and hadn't been reporting. We're current, fully reporting, trading on the QB, 200 plus assets, 9 active campaigns, and out, looking to develop and deploy our facility. That's it. I'm happy to answer questions if anybody has anything. All right. Thanks for listening, and I'll be around tomorrow if anybody has questions you want to ask individually.